You'd have to be living under a rock if you have not yet heard about this thing called ChatGPT. It's an AI language model which basically has taken the world by storm. You have the opportunity to jump into this chat environment, type in some information in what is referred to as a prompt, and in theory, this AI will give you a response, and it's a direct response to the direct questions you ask. What I thought would be interesting is to see exactly how it will respond to questions that I get asked on a regular basis. So what I've done is I've basically told my team, come up with a couple questions, and we're gonna see who gives a better response, me or ChatGPT. So let's jump right in. Is debt good or bad? That's an excellent question. There is such a thing as good debt, and there is such a thing as bad debt. When it comes to good debt, that's pretty much using other people's money to acquire what I refer to as assets. And if you're using other people's money to acquire that, you're essentially borrowing money to buy cash flow. I love that strategy. When it comes to bad debt, however, that's when you're using other people's money to acquire liabilities or things that depreciate, which don't give you any tax benefit for that depreciation. In the end of the day, you don't want to rack up credit card bills to buy televisions that, quite frankly, aren't really worth the amount that you're paying for them, or like a personal automobile, or even a personal home in which you live. Because at the end of the day, all of that debt is what I would qualify as bad debt. Let's now see what ChatGPT has to say. They sort of went on a good track, but I would disagree with some of the specific examples that ChatGPT came up with. When it comes to acquiring student loans, I would agree with that if that student put in the time to investigate whether that particular degree that the student was pursuing would return a reasonable amount of return on the cost of acquiring that particular degree. Fortunately, most students don't do that. So just making a blanket statement that student loan debt is potentially good debt, I wouldn't agree with. And they also talked about buying a home. If you live in your own home and you're acquiring debt, that home really is not something I would consider to be an asset. It's really a liability. You're losing money each and every year to taxation, meaning property taxes. You're paying interest on a mortgage likely if you're using other people's money to acquire that particular property. You have maintenance, upkeep, you have insurance costs. In the end, if you are not renting out your property or using it, at least on a short-term rental basis, you're not really acquiring an asset. It is definitely a liability, and I would categorize that debt as bad debt. What are the 3 best ways to protect your wealth? I'd have to say you want to start making sure that you're generationally protecting your wealth. And the way to do that is to ensure that all of the assets that you own are owned in trust. The second method of ensuring your assets and your wealth is protected is to make sure that your business entities have formal structure around them. You want to make sure there's a legal structure that surrounds your business enterprise so that you are protected from any attacks from outside forces, whether they be creditors or litigants, and your personal assets are protected from inside types of harm. So having the right business structure in place, that's the best second way to protect your wealth. The third way to protect your wealth is to make sure it's invisible. If you structure your business the right way and select the right domicile for the business entities you form, you could create significant anonymity protections. That process is affected in business when the state in which you select your limited liability company to be formed has those anonymity protections in place. For instance, the top 3 in the United States would be Nevada, Delaware, and Wyoming. My personal favorite right now is Wyoming. Let's see what ChatGPT has to say. It is critically important for you to be able to type the exact precise question that you're looking for the precise answer. You can see how ChatGPT took my question and got very general with it. Didn't really dive into any specifics that you should be considering when it comes to protecting your wealth. It gave you some very good advice, very good counsel that I would often give to people, but ultimately it's much more high level and much more diverse with regard to actually adding value in your own personal life. That being said, I think it's time for question number 3. What are the 3 best ways to create wealth? Well, first and foremost, I think I'd have to start off by using my financial freedom formula. I believe that all financial freedom boils down to this equation: free cash flow greater than your daily needs and wants. And when you understand that formula, you can understand that there are 2 different variables that potentially you have control over. You definitely have control over the daily needs and wants side of the spectrum. If you could drive those daily needs and wants down, that free cash flow attainment is a little bit easier. But again, in order to generate free cash flow, you have to start off with the best way, number one. And if I'm assuming you're starting from zero, that is to start off with building a skill. Develop a skill that you can bring to the market, that the market will say, that's so amazing, I'll give you my dollars for you to render that skill in my own life. Whether that's serving a business, serving an individual, either way, you're rendering a skill to generate cash flow. Step number two is to take that free cash flow and use that to acquire assets. So you're essentially using your free cash flow to buy even more cash flow. And that brings you to step number three, which I call compound asset acquisition. Over time, each and every year that you have free cash flow beyond your daily needs and wants, and you're using that to acquire assets which buy you more cash flow, you will have more free cash flow to buy even more assets. And that absolutely leads to wealth creation. I fundamentally disagree with the first response, because the first response is to invest in the stock market. I do not believe that the best way to create wealth is investing in traditional portfolio. I do believe a traditional portfolio is a great way to accumulate wealth, meaning once you've already created wealth, portfolio diversification is definitely a way to go. But it's not necessarily the way to create wealth. In fact, I don't know very many people in the entire world that have created their wealth through traditional investments. So I would say question number one, nah, not really. Question number two, starting a business. I wholeheartedly agree with that. If you remember back to my formula, free cash flow greater than your daily needs and wants, starting a business is your ability to generate more free cash flow. And over time, you can start more businesses or acquire businesses that already have cash flow. And there's a variety of ways to do that. And if you want to learn a lot about those ways to acquire businesses that already have cash flow, you're going to want to make sure you subscribe to this channel, because I'm going to be releasing some videos in the future to talk about specifically how to go about acquiring businesses that already have built-in cash flow. Now, when it comes to answer number three, saving and budgeting, well, yes, I think that that's a good thing for everyone to engage in, but does saving and budgeting actually create wealth? I'd say no. That's more on the wealth protection side of the spectrum, making sure you're not overspending, you're plugging the profit leaks that may exist within your enterprise, and understanding how the money, the dollars that are coming in are going out. So when it comes down to that, I would have to give ChatGPT a big old F with regard to this response. What is the best way to network with other business owners? Networking is critical, but it's important to understand who you're networking with. I believe that the network that you have leads directly to the net worth you will have. And if you're looking at that from a perspective, I think you should always try to be networking up, meaning deal with individuals who are at levels that you aspire to be, individuals that could share with you the things that you'd love to learn to take you and your life to the next level. With that being said, how do you do that? Well, first and foremost, you need to investigate where the people who have attained milestones of success that you aspire to, where they hang out. Are they involved in networking groups? Are they involved in masterminds? Are they involved in conferences and network meetups? Then put yourself into those rooms. Make sure that you're around those individuals. Now, a lot of individuals may not be able to afford to get into those rooms to begin with. I had a conversation with another business owner today, and he actually shared with me a really amazing tip. If you find out about a conference or a mastermind that has the type of business owners that you'd love to be around, but you can't quite yet afford to pay the fees to get into those conferences, his tip was book a room at the hotel, wherever that event is being held. Just hang out at the bar, because those individuals will be coming to that area eventually during the conference, and you'll have an opportunity to network and say hello and say, hey, my name is, and this is what I do, and this is how I do it. But here's a tip number two when it comes to that networking. Never, ever, ever try to sell in that moment. Your whole point is to figure out, is there a way for you to share your name in such a way that it sticks with the person who heard it? And the best way to do that is add value in that moment. Regardless of what you do, I'm certain that there are ways that you can add value to others in a moment, if you will. Share a tip, share a strategy, share a way for them to have significant value in just the few moments that they shared with you, and they'll be sure to want to share more with you. Now, let's see what ChatGPT has to say. I agree. Again, it's not as precise as I would like it to be, but it's an AI, it's a computer, and that's a pretty darn good response to a question that, quite frankly, is pretty open-ended. I'll give this a passing grade. Let's go on to question number 5. How can I, as a business owner, save more on taxes? So the very first thing you need to understand is that I believe so strongly that you, as a business owner, need to keep more of every single dollar you make. And the best way to start doing that is to plug the profit leaks that you have within your business. And the largest profit leak that most business owners have is taxation. So how can you save more money on taxes? I think the easiest way to start off, there's over 400 tax strategies. I don't think you need 400. 400 is an overkill. I teach 5 foundational strategies in our tax reduction bootcamp that I think every business owner should be employing because, quite frankly, they apply to every single business. Doesn't matter what type of business you have, whether you're a doctor, a lawyer, a coach, a real estate investor, doesn't matter. When you apply them the right way within your business, they result in a significant amount of dollars in your pocket that otherwise would have been going to Uncle Sam. One of those types of strategies could be something along the lines of shifting your after-tax expenses into the business realm so that you have them paid for with pre-tax dollars. A great way to do that is to institute something called an accountable plan. If it's structured the right way and your business is structured the right way, you as an employee get to be reimbursed for the business use of your personal assets. That reimbursement creates a tax deduction for the business, and you as the employee of your own business get to receive that income as a non-taxable fringe benefit. Hugely valuable to you because it has significant tax savings at the end of the day. Now, let's see what ChatGPT has to say. That is absolutely 100% fundamentally wrong. If you look at it, if you were any type of entity or any type of business owner, those business owners who are sole proprietorships end up paying the most amount of taxes. You're not in a lower tax bracket or a tax situation if you're a sole proprietor, so that's wrong. My fundamental belief is that we are at historically low tax rates. In fact, if you look at the tax realm here in the United States, the history of taxation, where we are right now, about 70 to 76% of the time throughout history, tax rates have been higher than what they are right now. I do believe that based on just fundamental economic principles here in the United States, tax rates will have to go up. Just think about it. We have $31 trillion of debt. Eventually, that bill is going to come due, and we're going to have to pay it. The only way to really pay that down over time is going to be a combination: generate more revenue, taxes, and spend less money, meaning cutting government programs. Now, all of that being said, my belief is that tax rates in the future are going to be going up. So if you're putting a lot of money into retirement plans, you're going to potentially be putting yourself into a scenario where you could potentially be paying higher taxes on that money in the future. So I'm not really a big fan of doing that to a significant degree. And this is a good question. There's a lot of things that can lead to a business's failure. I'd have to say, though, that the number one reason that I've seen is not mastering cash flow. Cash flow is literally the lifeblood of a business. And if you look at it, growth eats cash flow. And a lot of businesses get into this conundrum where they've built a business, they get some cash flow, and then they try to excessively grow, and that just consumes their cash flow, and they're left at the end of a month with looking back and asking, where did all the cash go? Cash flow is that process of understanding what is it that you're doing day in and day out to generate cash into your business. What is driving revenue? Mastering that will make sure you can stay in business. Let's see what ChatGPT has to say. I'd have to give ChatGPT a passing grade here. It is addressing all of the issues that really fundamentally impact a business's success and/or failure. And again, it started off right on the right foot with financial management. If you look at what I said, cash flow, that's definitely a component of financial management. Let's dive in to question number 7. What do I need to do to put in place the Augusta rule? There's a lot of things that you need to do in order to make sure this is done effectively. One is to ensure that you're doing it the right way within the business. Just to clarify what the Augusta rule is, it's essentially this rule that has come about that allows you as the business owner to rent from yourself as the individual homeowner your individual home for business use for a specific period of time, specifically 14 days or less in a calendar year. And when you do that, your business gets the ability to take a deduction, and you get to receive that income as a tax-free source of income for yourself. Something that's not even included on your tax return. It's excluded income. It's a beautiful thing to have. In order to put that into place, well, one, you're going to need to make sure you've investigated what a reasonable amount of rent is. Then you're going to have a rental agreement in place. Then you're going to have to actually pay yourself that rent on the day that you're doing it. Then you're going to want to make sure you're documenting the actual rental utilization. What are you doing with the business in the personal residence at that time? Meaning taking minutes of the meetings that may be occurring, accounting for all the parties that are in attendance, etc. So there are a lot of moving steps when it comes into it, and it's going to be really interesting to see what ChatGPT has to say. There you have it. ChatGPT versus Edward Collins. I'm going to leave it to you to decide who won. But if you have not jumped into this technology on your own and kicked the tires, if you will, you're doing yourself a disservice. I believe wholeheartedly that over the course of the next decade, this technology is going to fundamentally change how we live our lives and conduct our business. If you've loved this particular interaction and want to learn more about some of the responses that I had in here, for instance, within the tax environment, you're going to want to learn more about the Tax Reduction Bootcamp. I'm going to include a link to that in the description below. And if you've loved these 7 questions, I know you're going to absolutely love a PDF that I put together for free. 7 questions you as a business owner are going to want to ask your accountant. I hope you've loved everything. Hit that thumbs up, and I can't wait to see you on the next episode. Bye for now.